And we are live. Welcome to the Bitcoin Digest. My name is Dan. We're here to discuss all things Bitcoin. This is the Bitcoin Digest episode number 3. And today is the 15th of May, 2023. So as always, this is an online show and we are basically going live on this show on Zoom. Anyone is welcome to join using the instructions below. And of course, we discuss all things Bitcoin. Nothing is barred. There are no rules except for one, of course, which is no talking about shitcoins unless you're dumping on them, of course. So without any further ado, let's follow the usual course of this podcast, which is to go through the Clark Moody's dashboard. We look at the Bitcoin mempool, and then I've got a couple of articles that I'd like to discuss today. So without any further ado, since I'm the only one on this show at the moment, and I'm loving it, sharing, doing the show and sharing out to the best part of one or nobody at all. But nonetheless, I will persevere as I think this is a long-term project and I have a low time preference. So whilst I've still got my lonesome to entertain, of course, I will try and make it as light and sunny as possible. Okay, enough waffling. Let's get on with it. So the Bitcoin price is $27,355. So that's gone up slightly from yesterday. A single dollar would get you 3,656 sats, and the market capitalization is now $530 billion, which is $10 billion up from yesterday. Looking at the mining charts, the hash rate is currently 348 exahashes with a difficulty of 48 trillion. Difficulty epoch is 392. And the last difficulty change was minus 1.5%. The future target for the change is 18th of May 2023 with the estimated difficulty adjustment of 2.2%, which means that it will be 2.2% more difficult to mine Bitcoin. And so we can see that difficulty number go up. Mining economics, the block subsidy remains at 626.25 Bitcoin, and that's going to remain the case until next year. The 22nd of April 2024 is when the halving is estimated to take place, which will cut the Bitcoin subsidy in half and will be 3.125 Bitcoin. In terms of the mempool, we've got 53,000 transactions in the mempool. Percentage replaced by fee transactions, which have been undergoing replaced by fee at the moment, about 68%. The virtual size being 83 megabytes. Blocks to clear, there are currently 85 blocks before the mempool could clear. Pending fees of 10.3 Bitcoin in terms of the various transactions that are sitting in the mempool. Time since last block is 1 minute and 10 seconds. And the minimum fee rate is currently at 4.5 sats vbyte, which is significantly lower than what it has been in the past few days. So mempools are getting normalized, which is a good thing to see. And just looking at the transaction fees, so the fee rate is 93 sats fee byte. And the fee value is £11.50 for that. Bitcoin's inflation remains at 1.75%. This is a steady level of inflation rate, which will, of course, change and will be reduced next year when the halving takes place. All-time high for Bitcoin was $69,000, and a decline from the all-time high 60%. All-time high day was the 10th of November last year. The day since the all-time high is 551 days. So there you go. That's the mempool. Oh, sorry, that's the Clark Moody dashboard. Heading on to the mempool. As we can see, the mempool seems to be having, on average, 75, 40, 68, 88, 108, 28, 45. So it's still relatively busy. So as you can see, it says the minor rewards so far is 986 Bitcoin. Average block fees 0.59 BTC per block, which is relatively low. It's not as high as it was 2 or 3, 4, I say 2, 3 to 4, 5 days ago. And average transaction fee is 60.79k sats per transaction, which is about $4.59. So there are 357 blocks, which are sitting in the mempool. Well, it says 185 blocks, so not sure about that. And what else have we got here? Yeah, I think that's about it really for that. Okay, so wanted to discuss a couple of articles here. And so really and truly the point I wanted to make is that game theory of nation states adopting Bitcoin. So with this article that I'm going to read in a short while, it would seem to suggest that the game theory for nation states has already begun. And how many nation states are involved, we probably would not know until much later in the future when it comes out in the wash. But there may well be several nations already in this game theoretical game that's being played. And what we do know is that a couple of nations, at least that we're now aware of, have already started this game. So if we start with the nation of Bhutan, and this article says that Bhutan has mined Bitcoin since it was worth $5,000. The country is aiming to generate positive sustainable returns across a range of asset classes, including crypto, by tapping into its extensive network of hydroelectricity. The investment arm of Bhutan has been mining Bitcoin for a few years to diversify the landlocked nation's portfolio. Druk Holding and Investments (DHI) CEO Ujwal Deep Dahal told local media outlet The Bhutanese that mining Bitcoin is part of a long-term investment strategy. Bhutan is using digital assets to finance its operations, but it's holding onto some of the future. It's holding on is also holding on to some for the future, anticipating an increase in value following Bitcoin's halving in 2024, per the report. The country is reportedly aiming to generate positive, sustainable returns across a range of asset classes, including crypto. It's said to be mining Bitcoin with its extensive network of hydroelectricity in a bid to offset costs and environmental harms. Bhutan's high mountainous region and hydro projects present marginally cheaper production costs for an otherwise expensive endeavor. This has allowed DHI to funnel energy savings into buying up more mining rigs across, according to Dahal. Bhutan has paid back its Bitcoiners. Mining Bitcoin is also part of the nation's attempts to diversify its economy. In previous years, the government has tried addressing self-sufficiency woes by tapping sectors from tourism to agriculture. DHI reportedly began mining Bitcoin when its price was trading for roughly $5,000, although no specific dates were reported. The last time Bitcoin traded at those levels was throughout the COVID-19 market crash in March 2020. Prior to that, BTC had risen above $5,000 in April 2019 after languishing below for months in the depths of the previous bear market. Dahal also told local media the kingdom has managed to pay back everything owed to bankrupt crypto lenders BlockFi and Celsius after it took out digital asset loans to fund further investments. Last month, it was revealed that DHI made millions of dollars worth of deposits and withdrawals to the lenders in a number of cryptocurrencies, including Bitcoin, Ether, and USDC. So that's very interesting, and I'll come back to talk about this. But just delving into the next article, which is along similar lines, albeit a little bit more truer to Bitcoin than the Kingdom of Bhutan, which obviously is heading in the right directions, but appears to be engaging in shitcoining as well. And no doubt they will learn their lesson in due course. But for now, let's take a look at the other nation states that's involved in Bitcoin mining. So large immersion cooled crypto mining farms to extract Bitcoin in Middle East desert. A project to build 2 large-scale facilities for cryptocurrency mining is underway in the United Arab Emirates. The high-tech data centers will rely on a full immersion solution to cool the power-hungry miners, as the desert climate renders air-cooled mining infeasible, participants said. Advanced crypto mining facilities in Abu Dhabi to defy cooling challenges in Arab Peninsula. Marathon Digital Holdings, a leading US-based crypto mining company and emerging blockchain infrastructure developer, Zero2, are working to launch what they say will be the Middle East's first immersion Bitcoin mining operations. The partners have formed a joint venture, Abu Dhabi Global Markets, to develop and run 2 new sites for digital asset mining with a combined capacity of 250 megawatts. Marathon announced in a press release providing information about the project. The larger 200 megawatt facility will be constructed in Masdar City, the sustainable hub of Abu Dhabi, the capital city of UEA. The other 50 megawatt crypto farm will be located in the port zone of Mina Zayed, the announcement detailed. The sites will be powered with excess energy, thus increasing the baseload and sustainability of Abu Dhabi's power grid. The 2 companies emphasized their intention is to also offset any non-sustainably produced electricity used with clean energy certificates. Construction of the crypto mining farms is already underway and the mining equipment has been ordered. Both sites, which will have a combined hash rate of approximately 7 exahashes, are expected to come online as early as this year. Before starting the realization of the project, Marathon Digital and Zero Two launched a pilot program to establish the efficacy of a large crypto mining operation in Abu Dhabi, where the hot desert climate renders air-cooled mining infeasible. The initial results of the pilot indicate that operating mining sites in the UAE is now feasible thanks to an immersion solution to cool the ASIC miners, custom built by the two companies and implementing proprietary software to optimize their performance. The equity ownership in ADGM joint venture will be 80% for 02 and 20% for Marathon, with capital contributions in 2023 expected to total around $406 million. The details about the mining project comes after analysts recently predicted that increased regulatory pressures, energy costs, and taxes in current mining hotspots may result in a new migration of crypto miners to more favorable jurisdictions. So, wow, for me, I think this is really big news for a number of reasons. So the first one I really want to touch on here is Abu Dhabi. Abu Dhabi is an oil-rich nation, is one of the largest oil-producing countries in the world. And when oil is drilled, sometimes it gives off gas as a byproduct. And dependent on where the oil is being drilled, if it's not close to a city, then it's difficult to transport to transport the gas to cities, and so that gas ends up being wasted or flared, and flaring gas is obviously detrimental to the environment, and so they've got an opportunity to now put to use large sums of wasted energy effectively to mine Bitcoin and convert that wasted energy into actual resource. So this is another beauty of the Bitcoin incentive, because Bitcoin actually incentivizes the use of the cheapest form of energy. And what else is cheaper than energy that's already going to waste? It was energy that was never going to be used and was going to be exhausted somehow. And if you can put that energy to use to actually mine Bitcoin, then what would have been negative is now a positive. It's positive in the sense that you're getting rid of emissions into the atmosphere. That's one positive. And the second thing is you're getting paid for it where you wouldn't have received any payment at all. So the incentive, I think you can imagine that the incentive for doing this is huge, and it cannot be overstated that the incentive for this is huge. And similarly for Bhutan, it's the same thing. The same theme goes through this as well with the Bhutan, the nation of Bhutan. They are using free excess energy that they have to mine Bitcoin. Because they said Bhutan's high mountainous region and hydro projects presents marginally cheaper production costs for an otherwise expensive endeavor. It's already energy that they've got that is really freely available to them. It doesn't cost them anything much. It's abundant and is available, and they've just decided to use that to mine Bitcoin because it's free energy. It's effectively almost free energy for them. So the theme here is that nation states who have access to free and abundant or wasted energy, it makes absolute sense for them to get involved in Bitcoin mining, mine Bitcoin, and then they've got that Bitcoin to hand. They can either sell it or keep it. You can see in the case of the Kingdom of Bhutan, what they said is that they will they will sell some of that to fund other projects, and they will keep some of that and they will wait for the 2024 halving to see if the value to in anticipation of the value of Bitcoin going up. That's the game theory playing out right there. This is a country that gets it, that understands Bitcoin, and they're saying, and they effectively playing that game theory. Mine it cheaply, the excess Bitcoin, the money that you get, the value is going to appreciate, and it encourages and incentivizes them to hold Bitcoin and to keep it. And this in turn would gradually result in more and more adoption of Bitcoin, either through mining or other means. But ultimately, the demand for Bitcoin and the demand for mining Bitcoin continues to rise. It also has the effect of securing and protecting a network where significant hash rate is deployed into mining Bitcoin, which itself is the means and method of protecting it. The other benefit for Bitcoin is that it diversifies. It diversifies the concentration of Bitcoin mining companies and Bitcoin miners by moving it to other regions rather than it being concentrated either in China, as we'd seen pre-2020, or it being concentrated in the US post-2020. And now when you have countries like Abu Dhabi coming online and bringing online approximately 250 megawatts, which amounts to almost 7 exahashes. Now, 7 exahashes is a huge amount for an initial start, an initial setup, because if this proves successful, you can be very sure that Abu Dhabi will be bringing online significantly more than 250 megawatts. But 7 exahashes is effectively, just crunching the maths here, as I said, I'm not very good with maths, is effectively 7. It's 0.02% of total hash rate. So in QuickTime, they could easily get up to a significant amount of the proportion of hash rate. So I can really see them going up to about 50 exahashes if this is just a tester for them. And obviously what's made this possible for them is immersion cooling. And immersion cooling is effectively putting the miners themselves into coolant, into liquid coolant. And the liquid coolant basically keeps the machine cool and makes sure it can mine, because obviously Abu Dhabi is a very, very hot country. And so you couldn't really rely on heat on air cooling, because it's just way too hot. So you'd need to cool it in some other way. And liquid cooling, obviously, they've seemed to have done their research and it seems to work very well. And hence why they're now deploying significant capital into this to make this work. And you can bet your bottom dollar that they will be investing significant amounts into this going forward. And this is the game theory playing out. And if Abu Dhabi is mining Bitcoin significantly and is hodling, and if they're hodling a majority of the Bitcoin that they mine, then if Bitcoin were to be successful in the future, those countries and those nation states that have been mining and hodling their Bitcoin would see a significant appreciation in the value of their assets. And those who haven't been, who later get into Bitcoin when mass become when Bitcoin becomes a mass adopted on a mass scale, on a massive scale, then at that point, those who are coming in late would be enriching those who already have Bitcoin, um, who had adopted Bitcoin at an early stage. So this is really fascinating to me that this game theory is beginning to play out. And then the other question is how many other nation states are already mining Bitcoin, and that haven't really announced it. For example, we could see that the Kingdom of Bhutan had been mining Bitcoin apparently since the pandemic, since 2020. That's about 3 years ago, but no one no one knew about it. And this brings me to the key point about what makes this game theory realistic and a reality is that Bitcoin is the first truly immutable store of wealth. It is the first store of wealth which cannot really be controlled by anyone, cannot be changed. So we know there would only ever be 21 million Bitcoin. So you cannot have a debasement of it. Similar to how in ancient history, people could debase gold and, manufacture the gold coins and then chip bits off it, and do all sorts of crazy things. Even today, we've heard about tungsten being mixed in with gold. So it becomes really difficult to assay gold to see if it's actually true or real. The cost of assaying gold is exorbitant. It's going to cost a lot of money. That's another factor you have to take into account. Whereas with Bitcoin, you just hold your Bitcoin in your own wallet and you're absolutely fine. It's simple to assay Bitcoin because you just look on the ledger. It's an open ledger. Anyone can see at any time and work out, the exact amount of Bitcoin that exists, who owns what, is all available on the open ledger. That is Bitcoin. So it's an absolute game changer. No country can censor anyone buying or holding Bitcoin. No country can stop any nation state from adopting Bitcoin. As we can see, the Kingdom of Bhutan was able to mine Bitcoin and no one knew about this whatsoever. And if they kept quiet they could have kept quiet about this for even longer, and no one would have known about it. And Abu Dhabi, of course, they've chosen to announce this, but again, no nation can stop them from adopting this. This is a huge game changer. And so many other nations who may have been thinking of doing this but didn't have the courage, when they now hear of countries like Abu Dhabi and the nation of Bhutan basically adopting Bitcoin mining, then they will feel encouraged that they could do the same. They may start looking around, looking in their backyard, thinking, have we got any stranded natural resources that we can use to mine Bitcoin? And if we do, let's get on with mining it, right? So they could also start getting into this. And the beauty of it is that Bitcoin can be traded on the margins. So you're not subject to the international markets of exchange that you have to exchange through dollars. No, not at all. You can just buy your Bitcoin and sell them anonymously on any exchange worldwide. And you can exchange them for whatever you want to exchange them for, dollars, euros, pounds, or whatever. And this is just a complete game changer, right? And this really is the true meaning of sovereignty. Bitcoin is absolute sovereign money. And then the other point, of course, we've talked about stranded energy. And the last point I want to make on this is the asymmetric opportunity. So when I talk about asymmetric opportunity here, what we're talking about is the risk and the reward are not the same, because if Bitcoin were to, the risk of Bitcoin failing is one thing. Yes, it might fail, but if it were to succeed, then the upside is in orders of magnitude greater than if it were to fail. So if you take a situation, for example, you take 1% of your portfolio and you put that 1% of your portfolio into Bitcoin. And if Bitcoin were to fail, then you lose that 1% of your portfolio. But if Bitcoin were to succeed, that 1% could grow to be way more than 100% of the rest of your portfolio. It could really take your portfolio to orders of magnitude greater than what it was. So that's what we talk about asymmetry. The downside is limited, but the upside is absolutely incredible. That's the asymmetry opportunity of Bitcoin. And so really and truly, it's not about how soon Bitcoin could reach masses adoption, but it's a case of, if it does, and when it does, then the growth is going to be immense. So to start, I'll leave you with that thought around nation states adopting Bitcoin, and the game theory has started. It's no longer a theory, it's an actualism. It is happening right now. Nation states are vying for position for who would be the one that mines the most Bitcoin. And they are mining in full force. They see the benefit of it. Those that have been mining, and they continue to mine. Those that started, you can expect that they're going to mine significantly more. And so Bitcoin is here to stay. If there was really any evidence that Bitcoin will succeed, this is it. Nation states adoption. This is the evidence that Bitcoin will succeed, or at least the probability of Bitcoin succeeding has just ratcheted up a notch. We could say when a small country like El Salvador adopted Bitcoin, maybe the probability of it succeeding went up by a percentage from maybe like 5% to like 6%. But when you have Abu Dhabi, one of the oil richest country, one of the natural resource rich countries, especially one of the oil rich countries with huge amounts of stranded wasted energy, huge amounts of it. They have effectively enormous amounts of wasted energy because they have the largest depository, of one of the largest depositories of oil in the world. And so that comes with the equivalent amount of wasted gas. And if they can use a significant amount of that wasted gas in mining Bitcoin, you can be sure that the current amount of mining in Bitcoin will likely be dwarfed in the future. And as that happens and the demand matches and the supply matches with that demand, then you can be sure that over time the price would effectively come up to reach that level of demand as well. So yeah, I'm just even more confident that in time Bitcoin is just the future. There's just so many compelling characteristics of Bitcoin which are driving this forward now. So if you weren't if you were doubtful about Bitcoin, if you're wondering whether Bitcoin would fail, I'm hoping that with this, just these two articles alone, would show you that we're heading in the right track in the long run. So so thank you again. I think that I will draw that to a close here. Thanks again for joining us on the show. And hopefully I'll see you tomorrow, same time around 10 o'clock. And we can talk all things Bitcoin again. And remember my motto from yesterday's video: to avoid getting wrecked, don't just adopt Bitcoin, adopt a Bitcoin lifestyle. Take it easy, guys, and I'll see you tomorrow.